Welcome back, traders. Welcome to ForexLife. So in today's video, I'm just going to be showing you how to identify a trend. One of our subscribers asked how to identify the trend on the synthetic market. So the first thing that I do, there is different ways to identify the trend. Before I get into it, if you're new to this channel, please go ahead, like, subscribe, and comment below. Also click on the link in the description and follow me across all my different platforms, which is YouTube, TikTok, Instagram, and get access to my free Telegram group. Okay, so let's get straight into the video, how to identify the market trend. So first thing that you need to know is market structure. Is the market creating lower highs and lower lows, lower highs and lower lows? Or is the market creating higher highs and higher lows, higher highs and higher lows? That way you'll be able to determine if it's in an uptrend or in a downtrend. But if you have no knowledge of this, the easier way to do this is going over to your 4-hour time frame. Okay, now what I initially do is I don't go ahead and zoom my chart all the way in because I want to focus on current price. So I don't want to go back and check what's happening in the market. I want to focus on current price. So I just zoom out twice so that I can see current price. And in current price, we can see that the market is in a downtrend. So if we do this, we can see that the market is currently in a downtrend. The market is creating, let me just go back. The market is creating lower lows and lower highs. So over here we have a high, then we have a lower high because this high over here is lower than this high, so we call that a lower high. Then we can see the market is creating our lower lows over here, and then we have another lower high over here. So that is an easy way to identify the trend of the market. So we can see it's in a downtrend. Switch over to our 1-hour chart and we'll be able to see that it's also in a downtrend. As we can see over here, it's clearly in a downtrend. So now we know we should be looking for sells instead of buys. Another way that you can go and identify the market, the trend of the market, you can go ahead and add a moving average onto your main chart, and that will be a 200 simple moving average. So under your parameters, on your period, you change that to 200, shift 0, method simple, apply to close, and any color of your choice. So let's use purple. We click on done, and we can see when price is below the moving average, you can see it's in a downtrend. So this line, this purple line, is your moving average. When it's below, it's in a downtrend. And we can see over there that it's below the moving average, it's still in a downtrend. When price is, okay, it's still below. And then over here, when price is above the 200 moving average, you can see it's above the 200 moving average, we can see that it is in an uptrend. So that's a really simple way to go ahead and identify the trend of the market. Always check it on your higher time frames. Over here we can see it's a clear downtrend because it is below the moving average, and like I said, it's also creating lower highs and lower lows. Scale down to your 1 hour, check to see if it's below the moving average. Yes, it is. It's still in a downtrend, and you can go ahead and check on different time frames. So if you are going to be scalping the market, you check your 4-hour, your 1 hour, you move down to your lower time frames, and we see what the market is telling us. If it is above or below, then we can zoom in. We can see that it's clearly below the moving average over here. You can see the market is below, so it is in a downtrend, and then we can go ahead and scalp. So any strategy that I drop, always check the trend of the market, okay? Because any strategy works with the trend. Whether you're using a strategy, technical analysis, when you're using fundamentals, anything, it works with the trend. Always follow the trend. The trend is your friend. So that is what you want to do. You never want to be trading against the trend. You always want to be flowing with the trend, trading with the trend. So that's just the easy way in order for you to identify the trend of the market. And of course, if it's moving sideways, we will see a flat line. Let's see if we can find an example with a moving average. Okay, I'm just checking for some consolidation areas. Okay, it's not giving me. Can't see over there. Let's try a higher time frame. Okay, I'm not picking up anything there as well. But when the market is moving sideways, we call that consolidation. So if we look at areas, maybe on the 15-minute. So this over here, we will call consolidation. This whole area over here, because the market is ranging, it's moving sideways. So it's not creating any higher highs or any lower highs. It's ranging, so we'll call this stopwatch just highs because it's equal. All these highs are equal and all these lows are equal. So we call these lows. This is what we call consolidation, when the market moves sideways. Some people call it ranging as well. So it can be a ranging market. And when this happens, we wait for a break either to the upside and a retest and show momentum that is pushing to the upside, take a buy. Or we wait for it to break to the downside like it did over here. We wait for the retest and we wait for the momentum. So here we can see we had a nice bearish candle to show that the pressure is to the downside, and then you can go ahead and enter your sell. Also, you can do this by marking up your support and resistance zones. So when we look at this example over here, we can see that this over here is a nice support zone. Just get this. This over here is a nice support zone. So what happened was the market was ranging. It broke. It retested. Okay, over here, when it came back for a retest, it went back into the box. So this is, here would have gone ahead and trapped the buyers, because the buyers would have thought that the market will continue up. And then it came down, gave this push to the downside, this nice bearish candle showing pressure to the downside. But if you marked up your support over here, because we can see a whole lot of wick rejections, and this is where the market failed as well to break above or below. So we know this is a strong support area over here. So then we look to our left, we can wait for a break of this area, of the support area, and a retest. And here we have our retest on this candle, and we can enter. This is a safer way to trade. More aggressive way to trade will just be with a breakout. So if you trade with a breakout, you have entered your trade over here, you have gone into profits and then back into a negative, probably hit your stop loss, and then the market will continue falling. So it's best to mark up your support and resistance zones, wait for a break, wait for the retest, and then continue. Always place your stop loss above the last high. So that would have been the last high, and it's above the support zone. It wouldn't even come close to your stop loss over there, but that's a conservative way to trade. And then go ahead and take your sell. And then your take profit will be at the next support zone. So then we just go ahead and we look to our left, and we can see this over here is a nice support zone as well, with all these major wick rejections. So we just drag it across, and our take profit would have been over there. So we'd have entered here, and we would have take our profit over here, over there. Easy way to trade, guys, just using your mobile phone, nothing more. You can do everything on your mobile phone. It's easy, it's simple. Most traders, beginner traders, think you need a computer or a laptop. You can literally do everything on your phone. All the tools is at your disposal. You have all of these indicators that you can go ahead and use, play around with them. They are here for a purpose. They're here to show you the direction of the market. Remember, indicators do lag, but they do also give you a confluence to take your trade if you're using it in combination with your technical analysis. So that is a good way to trade, guys. Good way to find the trend of the market with a 200 moving average. Also, like I said, if the market goes ahead and creates lower lows, lower highs, lower lows, that shows a downtrend. And if the market goes and creates your higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows, that will show that it's in an uptrend as well. And remember your ranging markets, when the market ranges, it creates equal highs and equal lows. Wait for the breakout, retest, mark up your support areas. You can go ahead and use your Fibonacci tool as well if you want better entries. So if we had to use our fib over here, we mark it from the high to this low where it broke out. And we can clearly see that over here it came back and it almost touched our golden zone, which is our 78.6 level. And we could have even placed a trade here, entered the trade here, and our take profit would have been here at the bottom because of the retracement on the Fibonacci. So there's different ways to take your trade, to get entries on a position. It all depends on what type of trader you are. There are 4 different type of traders. We have our scalpers, our day traders, our swing traders. So go ahead and see which type of trader you are and use the tools to your disposal. If there's any other video that you would like me to make, like I say, always comment down below and I will go ahead and make the video for you guys, assist you the best way possible. Also click that like button. Like I said, it boosts my YouTube algorithm so that the videos can reach more traders that are looking for these type of tips to help them in their trading journey. Also go ahead and follow me on TikTok, Instagram, and my free Telegram channel. I hope this video helps you guys. Comment down below if you've learned something new today about finding the trend and your support and resistance, as well as using the Fibonacci tool to get better entries.